Hello, everyone. This is Romulus with Backpack Trader. Big inflation report this morning. Did you catch it? Well, we're all paying a lot more for everything that we live with every single day. Oil prices, well, here's the trick. Oil prices have been down a little bit over the last couple of weeks, but at $100 a barrel where they are now, still significantly higher than where they were not too long ago. Is inflation peaking, as Jeffrey Gundlach seems to believe? Possibly. I don't think it matters, though. Even if it does peak, it's going to stay high for a considerably long period of time. And look, maybe he's not right. Corn prices are here, breaking out to new highs as we speak. Wheat prices, these are things we need every single day to survive, right? Wheat prices are not too far. You see them breaking above a multi-week high right there. Soybean prices, these are all going into the food products that we buy every single day. They're breaking out to a new high. What about the beef? Where is the beef? Well, it's a little harder to come by in terms of good prices. They're not too far off their all-time highs. And hog prices, also pretty high. Prices are up. Things are expensive. And if prices aren't going up anymore, well, they'll still stay expensive versus where they've been over the past 25 or 30 years. And that is going to take an awful lot of adjusting around the world. Now, in America and a lot of modern economies as well, real estate prices have been going through the roof. And this, at least in your old buddy Romulus's opinion, is where the real problem lies. We can adjust. We can buy something else at the food store. We can adjust and adapt. But we all need to live somewhere, and housing prices are up across the board, and there's nowhere to hide from them. Take a look at this. This is the Case-Shiller Real Estate Residential Price Index in the United States. January 2022, $281,850 average price. That's up 19% over the prior year. 19%. That is absolutely incredible. Look at the rate of ascent as well. This actually is looking a little bit steeper than what brought us into the financial crisis in 07-08. And by the way, those prices then crashed the most in American U.S. Stock market or housing market history. Prices on average across America fell by about 27%. You see that right there? It's very interesting, in my opinion, that the prices got all the way back down to where they were in 2003, a 9-year pullback after suffering from about a 5-year drop. That's how long it took to put in that valley right there, 5 long years. Yes, it's possible that something like this could be going on again. As a matter of fact, if you take your eyes off of the day-to-day inflationary picture, and I know it's difficult because every time we fill up our cars or go to the food store, we're paying a significant amount of more money than we were not too long ago. But here is a basket of home building companies. Okay, so you have companies like Pulte in there. You got companies like Lennar, the big American-based companies that build the housing in this country. Look at that. It looks like a ski jump, for crying out loud. That's devastating. That's telling us something incredibly important for the future. We'll get into that in a moment. And again, I'm Romulus. I work with Backpack Trader. I'm here to help. Let's go back to it. Another company that could be showing us something for the housing market. This is one of the larger mortgage providers out there. Look, if housing is so healthy as the real estate professionals are trying to tell us right now, then why are stocks like this getting absolutely bludgeoned? How about Home Depot? Home Depot serves as a great bellwether for the U.S. housing market. This stock, it can't buy an uptick, for crying out loud. Double top here, that was the least of this company's problems recently. They were a huge beneficiary, as a matter of fact, post-COVID, when we were all locked down. We got heavily involved in real estate, whether we were buying homes or redoing our homes, putting money into our homes, rehabbing, fixing. Everyone's a home flipper these days. You know what's in a hammer? We got it. All right. But this stock is no longer anything to be looking at on the positive side of the ledger. And over the next several months, it looks like further downside action could be coming. In the financial markets, it is almost sacrilegious to suggest that the U.S. housing market could see some kind of a pullback. Anyone in the real estate industry would absolutely laugh me out of a room for even suggesting something like that. And while I don't believe that residential real estate prices are doomed to drop 25 or 30% as they did after the financial crisis. I do think we are looking at a pullback of some kind over the next 12 to 18 months. Maybe 3%, 5%, perhaps even 10%. Real estate prices have been more volatile in the last couple of, let's say, 15 years than they've ever been before in American history. There's something different. There's a fundamental change, a unique shift in what has been going on. It's like we've all turned into flippers, and now the U.S. housing market is one giant casino. That's not what the entire establishment is prepared for. And speaking of that, who stands to get most badly damaged by something like this? Well, we're already seeing it in Home Depot. We are already seeing that in the home building companies and the mortgage providers. But here's an industry that hasn't been hit quite as much yet, but stands to suffer greatly from what's coming over the housing market over the next couple of months to couple of years. The banks, okay? The banking industry, they're still highly dependent upon a very robust and healthy U.S. housing market. JP Morgan, Bank of America, even companies like Morgan Stanley, the broker-dealers, they're all extremely leveraged to the health and well-being of the American housing market. And your old buddy Romulus is stating this. According to the analysis, the market is not robust. The market is not healthy. It's not reflecting in prices today. That comes down the road. But the market is trying to tell us something. I believe in the power of markets, and they are suggesting quite powerfully and loudly that the U.S. housing market over the next several months will witness and experience a severe negative change. Look at the interest rate environment. Here's the U.S. 10-year. That has absolutely gone almost parabolic lately. Back about 6 months ago, interest rates on the U.S. 10-year were about 1.3%. They have more than doubled in the past 6 months. While I do not believe that interest rates are going to double 6 months from now, it looks like the damage is already in. It doesn't matter what they do unless they dramatically fall down from here, which is a very low probability. The damage is done. Mortgage rates are extremely high right now versus where they've been over the last couple of years. As a matter of fact, interest rates in the government bond landscape, at least, are now as high as they've been, dating all the way back to late 2018. Late 2018, almost 3.5 years ago. Pretty significant. To me, that suggests that the banking and financial sector has lower prices coming. Maybe not today, maybe not tomorrow, but lower prices coming. And speaking of today, tomorrow, here's what's happening there. JP Morgan typically kicks off the earnings season. We were talking about first quarter 2022, and this time will be no different. They announce their earnings, I believe it is tomorrow morning. That starts off the parade. And even if they do beat the estimate, you could see that little E right there. It'll give an estimate of $2.72 in the earnings, $30.6 billion on the revenue. Even if they do beat it, and even if the stock rallies, even if all the bank stocks rally, even if the financial sector rallies, 3, 4, 5, 6 months from now, I don't think it'll matter. I think all these prices will be lower, regardless of what goes on this coming week. So first, the bank earnings are coming out. That's very soon, starting tomorrow over the next week or so. And that'll be followed in a week or two by the large cap technology companies. And these, of course, are also closely watched because of the significance around the global economy. Same thing goes for me on these. If prices pull up a little bit, I believe it'll be an opportunity to lighten up, raise cash, sell, and become a more defensively oriented in portfolios and trading systems based on what could be a gift if these prices do go higher. You can see Microsoft has been getting really hurt lately, okay? And this is one of the stocks that's never supposed to go down, and here it is. We just saw Amazon. That doesn't look good at all. Apple is the best looking chart of all the large cap technology stocks. But this one rallied, though, and if I owned it, I'd be a seller of Apple without any question. Not a shortable type of a company, but I'd be a seller of Apple on a rally without any doubt. Okay. Hey, this is your old buddy Romulus. I'm thrilled for the opportunity to spend a little time with you. Hopefully, this does help your trading and investing and preparing you and your family for what's to come in the future. And what's to come, quite simply, in every major index, all major sectors, I believe that sometime between now and the end of September, that these lows are taken out to the downside. Again, these lows taken out to the downside in all indexes, all major sectors. And one last thing, let me leave you with this before I head back to the fun of the Forum of Ancient Rome. Costco, I talked about the stock. This was kind of a little bit of a documentary on what I was doing with this trade. I was buying it down in here at 552, sold half of it here, put a stop loss, and was stopped out of it yesterday, right about there, for just about $1.50 or so higher than what I sold it the first time around. Isn't that interesting? Anyway, not too upset that the stock finally that I got stopped out of the position. I am a little concerned over the intermediate and longer term picture of the stock market. Anything can happen day to day, week to week, but over the next several months, it seems to me lower prices could be coming, even if Mr. Gundlach is correct and inflation has indeed peaked. Doesn't seem to matter. The buying interest of the broad market across the world just hasn't been there lately, everybody. It hasn't been there. Well, thank you again for taking the time to share with me. I very much appreciate it. This is your old buddy Romulus. I'm heading back to ancient Rome. I will see you tomorrow. That's all for now.